Good afternoon and welcome to NYFP. Today I'm joined by Joseph Greco of Meridian Equity Partners. Hi Joe, thanks for joining me today.
Thank you for having me.
Well, in today's trading session, we're seeing that the major U.S. stock averages are extending losses. We did see a sharp sell-off in yesterday's trading session, but how much longer do you think this downside will continue?
You know, there's a lot of talk that support doesn't really exist in the market. Down to like 1220, 1210 level in the S&P, and we kind of tested it. I almost got there to test it. We were in the 1230 range, mid 1230s, and then the market started to rally back a little bit. So I think there was a little bit of a fill in on the buy side, but at the end of the day, a lot of traders are talking about pushing this market lower, and it being a combination of both sell interest and lack of bids at the same time, where people are just drawing their bids going lower and saying, you know what, I'll wait until the price comes in and then I'll get back in as a buyer.
Well, Joe, there seemed to be a little bit of a surprise regarding the sell-off we saw in yesterday's trading session, but what do you think is driving a lot of this fear and risk aversion right now?
At this point, it's all the stalling out of the recovery. The economy was doing fairly well, as most had seen into the end of last year, and we all knew that the first half of 2011 was going to be pretty strong, which it was. And even the earnings, for the second quarter that we just, went through, seemed pretty good and strong. Unfortunately, a lot of the indicators for the next two quarters and the next few months really aren't pointing towards as rosy of a recovery, and they're pointing towards actually a slowing down. We're obviously not having any improvement on the jobs front. We're having difficulty meeting, the debt obligations. There's continued pressure from the outside world, as well as there's nothing no movement on the homes front. Whether it's building or really the existing sales. So with that amount of inventory still overhanging, lack of consumer confidence and slowing in the manufacturing numbers, it really points towards a slowing down of our recovery, which means market's going to have to pull back a little bit. Fortunately, there are a lot of people, that are looking for that as an opportunity to buy on the cheap. So I don't think we're going to see the type of sell-off, that we had 2.5 years ago. But we're going to see some really, nice buying opportunities very soon.
Well, Joe, last but not least, before I let you go, since you mentioned a pullback, I do have to ask you about gold prices now. They do continue to soar to new record highs. And given that gold futures have topped 1670 an ounce in today's trading session, do you think a pullback is a good buying opportunity for the precious metal?
In gold in particular, yeah. If you can get some on a pullback, that's great. It'll make you feel a little bit better because, as many people are saying, this is not necessarily a bubble. People look at a bubble in the classical sense and say it's overinflated and speculation, but this is fueled by people who actually have legitimate concerns, and we're starting to see the unraveling of the American dollar, the euro, the eurozone, and that currency there, as well as just it's a cross-border, safe haven. So people are plowing into that, and it still represents a very small percentage of investable assets. So from an investment standpoint, from a currency hedge, and also from just a protectionist hedge for political risk, I think people are still going to continue to move in it, and there's going to be upside potential versus what it's denominated in the dollar. So any pullback, good time to buy.
Okay, Joe, as always, thank you so much for your time and thanks for all your insight.
Thank you for having me.